Hey everybody, this is Brant from Wolf on Wall Street Trade with the market update for the week ending July 24th, 2020. Let's just quickly recap last week's video. One of the themes was that I thought because it was earnings season, we're going to see the market kind of move sideways. So the S&P 500 for the week, this past week, was down 1/3%. So check, pretty much moving sideways during earnings season. The mega cap stocks got sold hard last week, the FANGs. That happened again this week. And I talked about this key reversal day in the NASDAQ 100, that it was a really key event. It was a big deal. As we see, what happened this next week, you will see again, it was a big deal. And that all of this was taking place as the NASDAQ versus the S&P had reached valuations that were like bubblicious back here, hadn't been seen since the dot-com bubble in 2000. And you could see how that ended. If you look close this week, you can see the NASDAQ versus the S&P 500 back below that line. So this was a key area. And the other theme was that gold was looking good. So gold, silver, that was really what moved this week. Big moves in both of those. Silver had its best week in 40 years. So let's take a quick review of the week. Okay, so this is a 10-minute chart of the S&P 500, and this is kind of where we left off last week, with this year-to-date unchanged mark right here at 3230.78, and S&P had tested this like 6 times last week, was rejected, ended below it. So this is Monday morning over here, got this major ramp right above, and of course this was NASDAQ actually driving the whole market higher, and in particular Amazon. And then we spent most of the rest of the week just kind of going sideways, and here you can see we ended the week right back below that level. This is Amazon daily chart, so this is what it looked like coming into the week. It was down 5 days in a row last week, pretty bad. This is where the NASDAQ had that key reversal day, and here's Monday. So that's that big move I was talking about, drove the whole market higher. That's 7.9, almost 8% for Amazon in one day. Here's the NASDAQ 100. It pushed the NASDAQ 100 up 2.9%, so monster day. What do? We shorted, of course. This is a 60-minute chart of QQQ, the ETF for the NASDAQ. You might remember in the last video, I showed this channel. There's the key reversal day. So this is how we left off the week. And I'm going to kind of zoom into this area and roll the week forward. So here's how we left off the week. We're looking at a 5-minute chart. And then we come into Monday with that big move in Amazon. You can see what it did to QQQ. So we're up here at the top of the channel. I was thinking about shorting it up here, big, huge day, very strong day. I was thinking about shorting it, wasn't quite sure what I was going to do. And volatility gave us a signal, but specifically NASDAQ's volatility. That was what sealed the deal for me, and I shorted it right here before the close. But before we get to that, let me show you something real quick, because each of the last 3 weeks, volatility has given some interesting signals at the very start of the week. Okay, so this is the S&P 500. This basically is just showing where there's unusual activity, high correlation between the S&P and volatility. So you can see the start of this week over here on the 6th got an interesting signal. Last week, again, interesting signal. And then coming into this week, interesting signal, except it wasn't from S&P's volatility, although it was acting up too. It was from NASDAQ's. So I just changed this over to the NASDAQ volatility gauge instead of VIX, and you can see coming into the week, there's that weird signal suggesting that there was some serious hedging going on. So that was why I decided to short that big up day of almost 3% in the NASDAQ. That's hard to short sometimes. That's what QQQ looked like as of the close on Monday. Overnight, Monday night and Tuesday morning, there was some distribution selling on 3C charts in NASDAQ futures. You can see the days here. So here's Sunday, Monday. Here's that huge ramp. And this is overnight. You can see 3C starting to see selling into the gains. And that happened right into Tuesday morning. And we kind of took a dive. So that was a good start to that short. I used weekly puts. And you can see the rest of the week here, 3C just never recovered. We kind of went sideways, consolidated a little bit. But 3C stayed negative, leading lower, and more selling on Thursday and into Friday over here. So here's that QQQ chart. Again, 5-minute. There's Monday where we shorted it, and I'll just walk it forward through the rest of the week. So this was my target, actually. I got weekly puts over here, and this was my target. But remember, in last weekend's video, I said it's very likely we're going to come down to the bottom of this channel. Here's the channel. So I'm going to zoom back in again. So I covered my short right about in here, and we could just see from the way price action ended Thursday that it was very likely we were going to get another leg down. And I gave out a target to my members Thursday night. I said, I think we're going to go down to 250, and if that doesn't hold, we're going to go down to 250. So there's 250, hit it right on the nose Friday morning. And then notice where QQQ spent the rest of the day consolidating right along that trend line. Here's the NASDAQ 100's daily chart. That's Monday, the big strong day. I'll walk this forward. Here's the Dow. It was down about 0.75% on the week. This is where we saw that rotation the prior week, and that had really benefited the Dow and small caps the most. But ever since that, and filling this kind of island gap over here, ever since then, just been going sideways. You can see it here sideways. Here's the moving averages I was talking about. We're so close to these, and we're in earnings season. I expect the trend to be more or less sideways with some volatility, of course. Here's IWM. It was the other beneficiary last week of the rotation out of mega caps and into cyclical value. Even though small caps are not value, they're more expensive than the S&P 500. But that's what drove this above the 200-day moving average. And ever since then, you can see sideways. Friday kind of got a little bit ugly, moved to the lows of the day. Where did it close? Right there at that 200-day moving average. So this is what I was talking about in that last video, that these are like magnetic levels, and unless something big happens, expect the market to kind of hang around these during earnings season until it figures out what's going on. I also mentioned this monster trend for IWM for small caps from the 2009 low. This is the entire bull market. Here's where we broke under the crash, and we've been seeing resistance up here. So I'm going to zoom in on a daily chart. And here is this week, as you can see, resistance right at that trend line. Okay, so let's touch on the 11 S&P sectors real quick on this past week. So remember, distribution are selling in the mega caps, which is technology, consumer discretionary, and communications. And we had seen the prior week rotation into the cyclicals value, which means energy, industrials, materials, financials, banks. So this week, most S&P sectors didn't do that much, kind of like the S&P down 0.33%, kind of sideways. The two sectors that did the very best were energy, which I've got a daily chart of up right here, and financials, but more specifically the banks. The banks got pretty much all the money coming out of mega caps. But the reason I'm showing this is the 50-day moving average. This is energy, second best on the week. I think it was up 2.2%. But you can see technically insignificant. Met resistance at the 50-day moving average, didn't break above it. The financial sector gained 1.3%, not quite as much as energy, but the banks ripped. Okay, so the KBW Bank Index was up 3.3%, and regional banks were up 4.85%. That's pretty much the only place money went to this week, and here you can see the KBW Bank Index. What is it doing? Chugging along this 50-day moving average. So although we're getting rotation into these sectors, it's more like a place to hide. It's not really like, hey, we're really excited about these. Here's the new trend of, accelerating economic growth, and these are the sectors to be in. No, it's just kind of tagging along this 50-day moving average. And this is kind of the same theme for a lot of sectors. This is why I said this last week about, earnings season kind of sideways, magnetic levels. Here's the industrial sector. This is the 50-day. This is the 200-day. You can see it met some resistance up here at the 200, but really barely moved from last week. Here's the tech sector. There's that key reversal day. Here is Tuesday, and that's the 50-day moving average. So how much more downside does the tech sector have in the immediate near term? Well, it's probably going to find some support right here at that 50-day. Here's the defensive utility sector, 50-day, 200-day. You can see resistance there on Friday at that 200-day. Here's the real estate sector, again, hugging this 50-day. This is what I'm talking about. These are pretty much the magnetic levels of attraction for price while the market kind of chews through earnings. And unless something, drastic changes, I don't think they're going to move too far from these levels. One interesting one, I mentioned XLV, the healthcare sector, for my members. Here it is on a 60-minute chart. You can see it has turned into a big broadening formation. This is a bearish formation. It's chaotic price action, higher highs, lower lows. And this is this week. I should have shorted this because I said to my members, we'll watch this one at 107 at resistance, hit 107 down on Friday. The theme being there's a lot of technical levels nearby, whether they're moving averages or trend lines or price patterns. On 3C charts, there was some action on volatility. We saw volatility strengthen a little bit. The other action was pretty much technology and NASDAQ, which I showed you the NASDAQ 100 futures with that distribution Tuesday. And here's the tech sector. So guess what? Same theme. Here's Monday, that real strong move into the highs over here. Monday, 3C is negatively diverging. And just like NQ, the NASDAQ 100 futures, just leading lower all week as prices kind of go sideways. And then we end the week lower. Prices catch down to what 3C is doing, which is making lower lows. This is really about the mega cap stocks being sold. Okay, so Apple this week, technical change. We saw one there. Here's a 60-minute chart of Apple. Here's the crash. Remember, tech held up a lot better in the crash. Here's the rally since. It's been about the mega caps, right? So this is Apple's trend line. The last couple days of this week broke. So this is one of the most influential stocks out there, and it broke this trend line this week. Okay, so let me explain this chart real quick. This is the S&P 500 in candlesticks, red and green candlesticks. This white line is just an index I created. It's equally weighted of the FANG stocks: Facebook, Amazon, Apple, Netflix, Google, Microsoft. So here's Monday, strong day, right? And you can see they led the S&P lower. If we pull up the NASDAQ, I'll change S&P to NASDAQ. You can see they're virtually identical because they have the most influence in the NASDAQ. Here's small caps, so they don't look so much like small caps, and you can see rotation. So NASDAQ being sold, some of the sectors that benefit small caps being bought. Here is the technology sector, so you can see the mega caps even leading that lower. If I pull up energy, here's energy. Started the week strong over here in the mega caps. Energy got bid the next day, right? This was as NASDAQ was starting to come apart on Tuesday. And if you look to the end of the week, it's not like energy is running away, like money's just, let's go, energy. It's just kind of going from here to there, and it's not too excited. It's just looking for a place to hide. And let me pull up the regional banks. Tuesday, you can see that rotation into regional banks, cyclicals, value, just like energy. And towards the end of the week here, you can see them kind of getting bid as the FANGs get sold off. And then there's also like this micro rotation back and forth like a hot potato. So this is Friday morning. The FANGs opened down. They sold off. They found a low, and they started to rally. And look what happened with regional banks. That was their high. They started to come down. So it's kind of like money's either going to one or going to the other. But the trend is out of the mega caps into the banks. But we also have these like little micro rotations that go the opposite way. Mega caps bouncing off the low and the banks fading off the high on Friday. Now, the knockout asset this week was gold, silver, gold miners, Bitcoin, even treasury bonds. So here is a 30-minute chart of GLD for gold, and this is where we ended last week, right here, just starting to break out of this bullish flag. And you can see bullish flag, bullish wedge over here, bullish triangle over here, bullish flag. So this is this week. I mean, monster move. Gold was up over 5%. Now, some of you might remember, let me back this chart up a little bit, this crazy volatility over here. And I said, I am not getting involved with gold, even though I like it, until the volatility dies down. And when the volatility dies down, you should see prices start to consolidate, not do this crazy stuff. So we had to wait through 2 months of that consolidation, but we're back to this really bullish action in gold. And this is what I mean by that. We got involved with gold way back here in 2018, traded almost every one of these big bullish consolidations. These are all bullish. Here's where volatility, gold's volatility, got crazy. Here is the time we had to wait for volatility to die down, and we're getting back to very constructive price action. And here's gold's volatility. So this is that area I was talking about where it was getting really crazy. Notice this week, gold's volatility is kind of ramping back up over here. Here's a daily chart for silver. So it wasn't doing anything. It was consolidating, but it wasn't doing anything relative to gold. It was coming down relative to gold, right? This is a measured move for this consolidation. Here is silver's run this week. So it easily hit that measured move. Let's take a closer look. Here's the crazy volatility in March. And just like gold, bullish consolidation. So this is the one we were coming out of in June. Broke out a little bullish consolidation. This is this week. So this is silver's move alone this week. 17%, the best week for silver in 40 years. By the way, you see this level 2080? That was my upside target. So on Monday, right over here on Monday, this is what I posted for my members. Monday night, I think silver has around 12% more upside. That's a lot. On this leg, just on this leg, or SLV, around $20.80. So that was here, Monday night. Here is 2080. And what is silver doing since it hit that target? Exactly what I thought it would do. Consolidate. Just to give this like some perspective, SLV on a daily chart, this is that move. Look at that. Let me just zoom out a bit. Look at the size of that move. Actually, I'll go to a weekly chart. But look at the size of this move. That's insane. So in my mind, it's due for consolidation, and that's what we have starting now. 5-minute chart, consolidating right there at 2080. So you might remember from the last video, I was long GDX gold miners. So here is a 15-minute chart of GDX. GDX ETF was up 6.4% on the week. That is the 6th week in a row that has been up. Went long right here on Friday the 26th and have been riding this all the way with call options. So we had another very constructive bullish flag over here, just like this one. So I have no problem. I stayed in it, and this is what we got this week. I put out a note to my members, and again, this was Monday night. So I'm looking for a near-term target GDX of 41 to 41.25. That was right over here, and here's 41.25 consolidating. And like I said, gold volatility is starting to really shake up. I did close that trade in GDX on Thursday. So we caught this whole move over here, and that was about a 290% gain on those calls. So very worthwhile, but I will wait for it to consolidate. Also along GBTC, which is the Grayscale Bitcoin Trust, and it was up 8.8% this week. And here it is on a 60-minute chart. So you can see about almost a 3-month big bull flag. This is kind of the consolidations we were seeing in gold last year. You got to wait them out. You got to be patient. You've got to have some pretty wide stops. But it's a very bullish consolidation here, and it's getting right up towards the top of this flag, where if it breaks out, it would be huge. Let me show you on a slightly different chart. So here it is, this trend line. Pay attention to this trend line coming in around 11. I'm going to go out to a 3-day chart. Here it is. Actually, let's go to a 2-day. Here it is. So this is that rally in Bitcoin into 2017. It came down, it consolidated. This is a big bullish triangle for Bitcoin or for GBTC, as we're looking at right here. And this is where that bull flag is. So if it breaks out here, this could be an absolutely huge move. So that's the reason I'm in Bitcoin. But it's interesting that all the forms of money this week that aren't fiat were basically up: gold, silver, Bitcoin. Now, because gold was rallying, I told my members, I think, you should take a look at TLT, the long bond on the long end. So let's pull that up real quick. Let me show you why I said this. So this is gold GLD in the green and red candlesticks. This is TLT in white. They're both safe haven assets. You notice they tend to track pretty closely. And here's a 15-minute chart of TLT. First, it was rallying, then it was consolidating in a big bullish triangle. It's a bullish triangle because it follows this uptrend over here. So this is this week. I could kick myself. I didn't buy this. I told my members, look into it, take a look at it. I think it's going to go higher. I didn't buy it. I should have bought calls, but it broke out over here from this triangle. Members, I put the target up, so we still got some upside here in TLT. That means bond yields dropped. Okay, so the short end was pretty much unchanged. The long end, the 30-year yield, fell like 9 basis points. So that's another safe haven asset, safe haven move. And because bond yields move opposite bond prices, this is the consolidation I was looking at, and I'm saying, if we get a breakdown below this, this is turning into a risk-off signal. So here is this week as bonds went higher, bond yields went lower. This is the long end, down 9 basis points, which means the yield curve flattened pretty sharply. These are not the kind of things you see when energy outperforms or when banks outperform. This is basically the market, the bond market, sending not a growth signal, but saying we are expecting a growth slowdown. Initial claims this week, the first time they've been higher over the previous week since March. So initial claims, people getting laid off, and we see how the bond market reacted. So the cyclical sectors that have been seeing rotation, they're not getting the kind of signals from the market that would suggest they should see rotation. And that's why I think people are just hiding out there, because they're cheaper as far as valuations go. These were things I was saying, watch out for. These will be risk-off signals. They're definitely sending the kind of signal that says the bond market is getting worried about economic growth here in the U.S. And what is gold and Bitcoin and silver? What are they all saying? Same thing. So you might think, well, bonds are boring. Why should bonds matter to me? I use macro overlays, so that's what I look at, messages of the market. So let me just give you a quick example. Here's the S&P 500 2-minute chart. This is from the 14th of July. Here's the 30-year yield. It's leading prices lower here. It's sending a negative economic signal. And speaking of market signals, we got a doozy. That's why I said, we're kind of going sideways, but we're getting some crazy market signals from the bond market, from gold. Here's the dollar-yen pair. Last time we got a really risk-off signal was right here as May payrolls were reported on June 5th. This led the S&P lower by 3 days. 3 days ahead of time, it led the S&P lower. S&P fell about 8%. Every one of these little drops below this trend line has seen the market either come down, or like over here, we got a key reversal day in the NASDAQ the very next trading day. So they're sending risk off signals. You're seeing the yen, a safe haven asset, being bid up. This is what happened this week. I was saying watch 106.75. There's 106.75. Blew right through it. That is the safe haven yen being bid Thursday, being bid Friday. It's sending a risk off signal. There could be any number of reasons. I'm still short FXI China 25, and we're seeing tensions ramp up between the US and China. I think I covered FXI last week. This is a 30-minute chart. Got this monster move higher, and it was just based on a communist-run state newspaper hyping the market and everybody chasing it. I shorted it right over here. Last week it was starting to consolidate. I said it's just consolidating bearishly. I have no reason to get out of it. And it's down some more this week on those tensions. Here's the S&P and the yield curve, another signal, another risk-off signal, and this is related to that trade I was talking about. But let me show you one more thing. Here's the S&P. This white line is an equal weight index of high-yield credit. So this is what I was pointing out towards the end of the day Friday. Credit does not look like it wants to break down early next week. And what do we have going on early next week? We have Facebook, Apple, Amazon, Google, Boeing, all reporting. So we've been seeing all this motion out of these mega caps the last 2 weeks. Next week is pretty much go time for them as far as the earnings go. So I don't think the market wants to sell off in the beginning of the week. I think it wants to see what the earnings are. But there is that one trade, and I will stay on top of that because I'm like drooling over it. Like I said, the price action just wasn't there yet. So with that, I'm going to wrap up this video. Thank you so much for listening, and if you enjoyed it, please give it a thumbs up. I do appreciate that. If you have questions or comments, please leave them in that section below, and I will do my best to answer all of them. You can follow me at Twitter, and you can also check out the website. You can sign up for free posts. You'll get notified by email when there's a free post out, and I think I had one this week, pretty big one. And you can also check out signing up and being a member. It's $50 a month. It's not a whole lot. We had some huge trades this week, but it's really more about the intelligence of what's going on in the market. You put your own trades together if you want. Follow along with mine. So everybody, have a fantastic weekend. Thank you so much. Enjoy your Saturday and Sunday.